Hello friends, happy Navratri to all. On this auspicious day of first Navratri, I welcome you all to my channel Freedom from Stop Loss. Okay, so are you also scared of this demon of loss in stock market trading? Do you feel that you are unlucky because your stop loss was hit and then the stock moved up? If it is so, then this video is for you. Okay, so in this video, we will be discussing about the strategy of rotation of options on stocks. I have already discussed this strategy in my previous video and how to execute it in FNO trade. Okay, so if you have not gone through the video, you can go through the video. The link is given in the description box. Okay, so let me tell you that the USP of this video is that this strategy is not discussed on any of the platforms so far. Okay, so let us start with the strategy of rotation of options on stocks. Let us take an example here. So we are taking Reliance stock future, okay, which is currently being traded at 2,350. Okay, so let's say we take one lot, which is equal to 250 shares. So what will be the total contract value? It will be 2350 multiplied by the number of shares, that is 250. So the contract value comes out to be 5,87,500. Now for this contract value, the margin that you need is around 1.5 lakhs. So let us say that we are bullish on this stock. So according to the strategy of rotation of options, what we have to do is we have to buy the stock future at 2350, and at the same time we have to buy the put option at the same strike price, that is 2350. But here we are buying the put option at 2340 strike price, giving 25 rupees as the premium, because the strike price of 2350 is not available. So that's why we are buying the nearest strike price, that is 2340 at 25 rupees premium. Now let us see how your overall profit or loss is determined according to the movement of the stock. Okay, so let us assume that the scenario is favorable for you. That is, you are bullish and the stock moves up. So in that case, 2375 is your break-even point. Why? Because we have bought the stock future at 2340. So we have bought the future at 2350. Okay, so if we have bought it at 2350, we have 25 points profit in future, and then we have 25 points loss in put option as well, because we paid a premium of 25. So there will be no profit or no loss. Okay, so that is your break-even point. Now, above this break-even point, you will be booking profit. Okay, so let us say that it moved up to 2390. So your profit in future is 40 points. Loss in put option is 25 points. So overall profit will be 40 minus 15, that is, 40 minus 25, that is 15. Now it moves to 2400. So the profit in future is 50, loss input is 25. So the net profit will be 25. Okay. So this is your favorable scenario. Now let us say that if the stock remains at 2340 or it moves down, so that will be your unfavorable scenario. So if it remains at 2340, if it falls at 2340, then what happens? Loss in future will be 10 point. Why? Because we bought the stock future at 2350. Okay, so we have a loss of 10 points here. Profit input option, which is showing as minus 25. That means it is a basically loss of premium, that is 25. Okay, so overall loss will be 10 points loss in future and 25 points loss in put. So it will be total 35 points loss overall. Now let's say it moved down to 2330. So loss in future is 20. Profit input will be 10 points actually, and minus your initial investments, which is 25. Okay, so basically there is overall loss of 15 points here. Okay, so what will be your overall loss? 15 points in future and 20 points in, sorry, 15 points in put option and 20 points in future. Okay, so it will be total of 35 points. Now, let's say it comes down to 2300, 2300. Then in that case, there is a loss of 50 points in future and there is a net profit of 15 points in put option. Okay. So what will be the overall loss? 50 minus 15, that is 35 points again. Now let's say it moves to 2200. Then the loss in future is 150. Profit in put is 115 points. That is, profit is actually 140 points minus your initial investment. That is 115 now. Okay. So what will be the overall loss? 150 minus 115, which is again 35 points. So are you all getting that the purpose of this put option is that your maximum loss is defined. Okay, overall loss remains constant if you resume this put option. But here we have to rotate the options. What we have to do is at 2300, we have to keep the future as it is, stock future as it is, and then we have to book profit in the put option, which is 15 points here. And then after booking this profit, we have to again buy the put option at 2300. Okay, now further it goes down to 2200. So again, same thing, we have to book the profit in 2300 put option. Then after that, we have to again buy the put option at 2200. This is how we rotate the options when it goes down, down, down. Okay. So here the main two advantages are your maximum overall loss is defined. Okay. And second thing, you don't have to apply the stop loss. Okay. So I hope the strategy is clear to you. If you have any doubts or any queries in this strategy, please drop comments in the comment box. If you liked my video, please like it. Please subscribe to my channel and comment on my video. Okay, so thank you so much for listening to me. In my next video, I will be back with a strategy wherein you will be trading without futures but booking profits just like futures. Okay, so let me tell you that all the videos in our channel is for educational purpose only and it is not intended for any financial advice. Okay, so thank you so much and see you in the next video. Bye-bye.